and never mind 6,000, what about 3 billion? That is the commitment on tech that they're stumping up, which is just a phenomenal figure, is it not, from what already has been, no doubt, a massive, massive spend to keep up with the Joneses. Well, Chris Conway from the Australian Stock Report live now for you with his views, weighing in on that discussion. Chris, welcome. The 3 billion, put this into context. For the sector, is that kind of where everyone's been positioned and had to be, forecasted?
Good afternoon. No, look, Carson, I think this would have been, or this is a spend over and above. From my understanding, NAB had already committed $3 billion to reinvesting back in the bank. Now, I don't know whether that was all on tech, but they've obviously come out today and committed another $1.5 billion. And I think that is partly the reason why the stock is down a little bit today. Yes, there's the provision in FY 2018 for the redundancies, 500 to 800, so I agree with Adam on that point. But it's that further 1.5 billion. Maybe some investors are asking the question, well, why do we need to commit this amount of money when we've already committed 3 billion in the past to improving the operations of the bank? And without further detail on that, maybe that's part of the reason why the stock is being sold down today. So, look, it is a huge commitment. Overall, though, and long term, though, look, I think these institutions need to do it. It's all about speed and efficiency these days. It's all about being able to use mobile apps and that sort of stuff. So I think this spend is essential. It's just a bit on the nose today because it was unexpected.
Okay. Now, just in terms of your call via that Bendigo outlook from yesterday, reflecting on it, Chris, are you now shifting and saying, look, there'll be a clear sort of demarcation in the market between the regionals now, even though they did exercise, did they not, every opportunity to raise out of cycle like the majors?
Yeah.
So they've availed themselves of it. They haven't just sat back and played cutesy on it. Chris?
Yeah, look, I don't pay too much attention to the regionals, I must admit, and that's because, in my humble opinion, they're not best of breed. And that's not to say there's not opportunities there, but my focus is on the top four. But even then, again, sort of to Rudy's point, they did have a run up, and I think I agree with Rudy that it was because people were buying it ahead of dividends, and it's a challenging environment for the banks. And I think even NAB's results again point to that today, that they have to spend all this money potentially just to tread water. So I wouldn't necessarily be buying the banks, the big four at least, at these levels anyway.
Okay. I agree with Rudy too.
Mm-hmm. You've been on that road, on that bandwagon though for quite some time, right? This is not a new call.
No.
Fair enough. Myer, what was new from yesterday? There's been a recovery to a measure in the share price, but it's all relative. Sol had a spray, as he's wont to do. Chris, what was revelatory to you about that from yesterday? It seemed like it was more of the same.
Yeah, there was nothing really new in it. The only thing in reading some research this morning that sort of caught me by, well, not surprised, but the numbers sort of hit me in the face. So forgive me, I have to refer to my cheat sheet here. So there was a survey of Myer customers. Less than 30% of customers believe that Myer has good brands. Less than 15% believe that staff are available and helpful. And less than 20% enjoy shopping at Myer. This is from customers of Myer. If that doesn't hit you in the face, I don't quite know what will. It's just one more straw on the camel's back of a host of problems that Myer faces. The only thing that I've heard recently that I think might be some cause for relief is that they are accelerating the program to bring people into stores. They're trying to make them sort of extra sensory. The term is destination. So they're trying to spend some money and accelerate that program to bring customers back into the store. So, that's about the only thing that I think that is
so what?
to provide any relief.
A notion of rounding them up from the aged care facilities, and busting them out on that basis. I mean, practically, who's going to be a willing participant? It sounds like, almost
coercion.
Coercion, correct.
I think the best thing they can do is they can hire some militia with really big guns and they go into the street and they actually force people to go into the store.
One thing we've definitely...
No, all jokes aside though, guys, all jokes aside, there are stores in the US and there are stores in Europe that are an experience that you would go to for an experience and then you will spend money. Now here in Australia, retail is so far behind what's going on in America and Europe. I can't remember who it was, but there was someone on the show earlier this week saying that even in terms of systems and operations, we're at least 10 years behind what goes on in the US and Europe. So it can be done, Will Myer survive long enough to do it? Well, that's the question. I would posit no.
Yeah, and a concern when the outgoing chair professed not to know who was CEO at Premier. I mean, again, this is not gallows humour. This was actually direct quote. Who is it? Who's running it? Moving beyond that one, let's go into Boral, shall we? The transformative quest, well and truly on it. Chris, North America holding the keys to the kingdom. Are we getting there? Are we getting a sense of light there emanating for the business?
Yeah, I think so. This was a positive in contrast to Myer that's all negative. This was actually a positive. I'm just going to bottom line it here. I like the way that they have positioned the business, taking some of the focus off the Australian operations. There has been some problems in the US business, and that's obviously because of the hurricanes. I think it was a $5 or $10 million impairment that they pointed to. But back here in Australia even, East Coast Australia has been doing exceptionally well. I think they're talking about low single-digit EBIT growth. And that's because of the good weather. You're not going to get good weather all of the time, but it seems like, as I said, the business is well positioned to take advantage of increased infrastructure spending here in Australia, and they also have that headwaters, over in the US that will take advantage of an improving US economy. So I think a business that's doing well and is well positioned.
Because this was the issue, was it not really prior to the tie-up? It hadn't been exactly a shoot the lights out run for either side in North America. Somehow, though, united, they're a more compelling proposition. But these are not going to be runaway numbers, are they? The market's expecting. It's going to be a fairly...
The market is gradually warming towards it, yes. At first it was quite critical because it's something new. But they've got some analysts over in the US and presented them with numbers and locations and
well done with numbers.
Exactly.
Contrast it with Brambles, if you could. The quest on there to convince shareholders this is not structural. This is just a little bit of a cyclical hiccup.
I think it's also the markets that Boral's playing in the US. Brambles is predominantly, or has a lot in Europe as well. So, European markets aren't firing as much or have not had the uptick that they've had in the US. So, it's just going to take a little bit longer, perhaps, for for Brambles to sort of get that traction that they need because they've placed a fair bit of that bet in Europe.
And you're confident that there's not going to be sort of a downgrade on earnings forecasts?
I don't know if I'm confident on that one, that's for sure. It's been a tough stock.
Don't look at me to be confident of Brambles. Right?
It's a tough,
Brambles has a little bit of a shaky
story.
legacy, and that goes beyond this management. The problem with Brambles often is, and that should worry everyone, is that at times it would appear that management doesn't really know what's happening in their core markets. And then all of a sudden a profit warning rolls out of the curtain and nobody knows how to explain it. And that is not the type of companies I usually prefer to invest in.
Just on that note, Chris, from yesterday, but it still looms here with still a 2% sell on Amcor. Speaking about markets beyond your home patch, they were calling out yesterday EM as being under expectations.
Latin America.
Right. Now, is that something they can turn the ship around for?
No.
Well, you're saying no.
As a company, you can't control the market.
Right.
The market controls you. But what you can do, exactly, you anticipate and you adjust as good as possible. A company like Amcor will because it's one of the truly global companies we have on the stock exchange. And we know now that the Australian operations are with Aurora. But there's always something in the business like that, because if it's not Venezuela, then it's Colombia or Bolivia, and if it's not there, then it's in Belgium or in Germany. But so that's basically part of the course. And sometimes the reason why I like a company like Amcor is when they have some bad news, it doesn't mean they're going to halve their profits or something along those lines. I mean, we're talking a few percentages.
Also risk, sorry to interrupt, but also risk is on back into this market, and Amcor's are fantastic in that defensive stock where you bed down when things aren't as good. So you're seeing that sell back from that risk on position.
Although it hasn't stopped the share price from going up recently. Right?
Yeah.
Okay, we're going to call time on it. Chris, I want to thank you as well for joining the show from Australian Stock Report. They're live
Thanks,
into
guys.
the program.